anything with a short squeeze on Monday and Tuesday was just getting bought up in an aggressive way. I'm going to focus in on the stock that started it all. We go back to the 2021 rallies, in the meme stock rally. I'm going to talk about GME, and I'm going to show you the price action that we've seen on GME over the past couple of days, and let you know why you shouldn't necessarily buy this, or if you're an inexperienced trader or your platform doesn't have the ability for you to get in and out of positions, or trade through halts, why you shouldn't mess with this in the first place. So we talk about, we had this meme rally because the social media influencer, War Kitty, whatever the heck his name is, same person that sparked the 2021 meme stock rally. He comes into this and posts for the first time in 3 years, one of those Braveheart scenes, the classic freedom one, and then off we go. Off into the races we go. But here's why I don't like the price action as it trades. If you look at my chart here, this is just a 15-minute chart, and we're really just talking about this week. Here is the price of GME on Monday. You saw the spike up, spike down, find a basis of support. But then most of the action on this, look at where it's happening in the post market, in the pre-market. All right. So pre-market Tuesday, right? Here's what we're seeing all the way up, right? And then you get Tuesday's market action back up to the upside. Look at the post market action, and then look at the pre-market action. So if you don't have the ability to execute pre and post market, or it's limited, or you've got limited ability to do that, it gets really spready. This is the danger, right? And again, as newer traders, I know that we've talked about it on several of our streams and several of our programs before. We tend to over leverage into positions, right? We say, well, I need to go in with a full size position, right? Because I want to make sure that I capture as much of this profit as I can, and then I'll get out here and I'll get out there. But the action during market hours, while very pronounced, you're seeing the majority of the action pre and post market. So let's talk about the price action in and around this $30 level. Now, one of the traders I typically follow managed to get in a long pre-market on Monday, right? Because the meme came out Sunday. This trader got into he got in during the pre-market, right? Taking a big risk, but he got in and around this $24 level and managed to catch about $7 or $8 on the move to the upside, and then was able to hold this position the rest of the day and close out at the rest of the day. I would say that's 0.01% of traders in the world. A lot of people here, as the market opened, right? These are 15-minute candles. This was probably a fairly easy trade to the long side, but this thing was halted aggressively, and we'll talk about that here in a minute. And we see where, okay, Monday you're looking like, okay, this is going to be solid and this is going to be sustainable, and we all have memories of that GameStop rally and how high it just kept going and going and going. But people with money in these shorts have a lot more money than the retail traders that are trying to push this thing higher. And so where were they trying to scare these people? I don't know that we necessarily got really scary, because it didn't happen during market hours. It happened in the post market here. And so we see this, and you're like, oh my God, $33 all the way up to $78. Pretty much wick this $80 level. Look at this. Wicks this $80 level pretty much to the cent, and then we just fall off of there, and we were the lows on Tuesday were in and around that $36 level. Now, if you look at this past in a past tense, you could say, oh yeah, here's resistance turning into support, right? We resisted in and around that price, therefore we support in and around that price. So it's a pretty clean trade after the fact. However, how many people were stuck buying in here, buying it all the way down, getting themselves blown out of the position, and then that one patient person seeing that this is support turned into resistance, buying that $36 level back up into the 60s. But look at what we're doing: lower highs, right? Lower lows. And so now we're starting to swoop down. And now you look at the volume, right? Volume was pretty consistent the first couple of days. I would say a little lighter during yesterday's trade. We based out in and around that $33 level. Again, I don't know that I would have picked out that level necessarily. Maybe looking at this pre-market action here, we did bid back up towards that $40 level. We've sold off again, and now we're back at $33. And so, what is the difficulty in making a trade on something like GameStop? Number one, it was short sale restricted yesterday. So it was short sale restricted yesterday based off of the fall that it had the day before. So you couldn't necessarily sell the thing short, right? So you were, if you didn't know any better, and you didn't know how to short on the bid, or maybe your platform doesn't allow for you to kind of short on the bid, and you have to short on the ask, well, then you couldn't short it. So the only thing that you could do is long. There were several platforms that reported suspending the trading on the asset, and this was apart from the halts that the Nasdaq was putting on this. We talk, and what I mean by that is, uh, I think I had this pulled up. GameStop and AMC shares were halted 38 times on Tuesday. This was during Tuesday's trade. We didn't see, I didn't get the count for yesterday's, but 38 halts, right? And if you were on the wrong side of the position, or you don't know how to trade through halts, which most of us don't, this is the danger that you find yourself in, right? And especially if you don't have a theoretical auction price option on your broker platform, or on your execution platform, or on any sort of news provider, then this is the danger that you find yourself in, right? Because if you buy a long and then all of a sudden it halts down, chances are it's going to halt. It's going to open up even further down, right? And again, new traders, they go in full size positions, typically thinking they're going to capture, this is going to make my trading career. And they get caught on the opposite side of there. They can't, and during a trading halt, if you don't know, you can't get in or out of position. You are stuck in that position until the stock resumes trading. Typically, on a circuit breaker halt, and it was designed to like prevent market sell-offs, right? You're going to be stuck in that position for a minimum of 5 minutes, right? So now you're waiting 5 minutes till the stock resumes trading in order to be able to execute off of that position. Some of these halts were like back to back, back to back, back to back, right? And so the issue of reopening a stock and getting all those orders consolidated and having that theoretical auction price, kind of get quoted and then re-executed. There again, we talk about the competition in the marketplace for retail traders. We, as retail traders, don't have the assets that a lot of these bigger firms and bigger trading firms have in order to see these theoretical auction prices, in order to see where we could trade to, or a halt detector or a halt scanner, making sure that we're in and out of these positions before the halt happens if you don't want to trade through the halt. So it's very, very, very dangerous trade. You talk about what this did early in the week. Let's pull up Twitter. All right. This was Robinhood hit $5 billion, right? May 14th in trading volume for the day. So it's one of the biggest trading volumes that they've seen over the past 12 months. And that's obviously retail trade. So the retail participation in the market is huge. But that leads me to believe it's a bunch of retail getting slapped around on this stuff again, right? Because if you don't get on the front end of the move, right, and if we're not executing positions, and if you're a U.S. trader, you got PDT rules, right? So, 3 trades in a 5-day period, 3 round trips, you can't make more than that if you don't have more than $25,000 in your account. And so if you're kind of, stuck in these PDT rule things, that could be a very, very, very situation. Whether you're trading shares or options on this. Yeah, I didn't even look at the options market on this. I'm sure that it was absolutely nuts and prohibitively expensive, right, in order to trade these, because once the implied volatility goes up on these options, the prices go through the roof because the options market makers are trying to squeeze out as much money, right? They don't want to get shellacked on this stuff either. But there's, again, as Robinhood says, hey, we got to shut down trading for a couple hours on the platform to do XYZ, right? I said Z like a foreigner. I like it. I bet everybody's looking on me a little bit. This is about the time they said, okay, well, 1 a.m. to 3 a.m. Eastern Standard Time, it's not really necessarily open to trading as much, but we saw again where the action was happening. It was pre-market and it was post-market. And so that's kind of those are the things that I'm looking at. I'm saying, okay, this is what makes this a lot more dangerous. And then if you look at the replies, right, it's not like, hey, we have faith in Robinhood. We appreciate you. Yeah, thanks for upgrading the platform while we're trading these volatile assets. Everybody's seriously replying, like, what are you doing with the platform? So that you guys can get out of position. There's still a lot of mistrust in Robinhood, even though Robinhood, in my opinion, is a little bit different of a company than it was back when I opened an account. But again, at the end of the day, you know, a lot of people don't necessarily have the trust in Robinhood as they did before. And then what did the stocks do on Wednesday? Well, Wednesday they just they were the shares really tumbled. And again, old money. This is the infamous tweet from I said War Kitty, Roaring Kitty. This was the infamous tweet that was put out. I won't play it, but that was the infamous tweet that was put out, and then everything kind of went haywire. AMC fell 16% after surging 135%. I don't go to the movie theater, so therefore, AMC is not a stock. But again, adjacent stock. We talk about GME, and that's the price action that I showed you. But this affected a lot of different symbols as well. Trading the retail investor darlings was halted multiple times during the session. $3.4 billion of GameStop shares were exchanged. It's like the volume on this was
Jeez, man.
ridiculous. And again, I think it's just retail money getting slapped around, not retail money getting in at opportune times and then getting out at opportune times. And so, again, there's a lot of eyes on this because of what happened before. And these bigger funds and these bigger fund managers have already learned their lesson on what these things did. So we'll pull up a couple tickers here real quick just to kind of show you an idea. So again, let's look at an AMC in and around the same time period. AMC looks much in the same way as GameStop. Look at this surge. I mean, again, this is hundreds of percent. This is where AMC was in and around this $3 level, and we surged in the pre-market on Tuesday all the way up to $13. That's hundreds and hundreds of percent on the stock. And it traded its float over and over. So anything that had a large short float, or even ones that were adjacent. Let's pull up Reddit's chart over the past couple days. Now, Reddit holding up a little bit better, and this was something I'm a little bit more comfortable with because Reddit is a recent IPO. Reddit hasn't necessarily fully monetized their business. They just reported their first kind of like quarterly earnings, and so there's a little bit more juice to the squeeze in terms of a Reddit, but anything that was basically squeeze or squeeze adjacent or had a large share float was very much in play, or a large short float was very in play, but don't buy it.